Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Renasant Corporation Annual Report. Renasant Corporation offers a diverse range of financial services to its customers through its community banks, insurance, and wealth management segments. The community bank segment provides various banking services including checking and savings accounts, business and personal loans, asset-based lending, factoring equipment leasing, safe deposit facilities, and ATM services. It also offers commercial, agricultural, and real estate loans, as well as installment loans to individuals. Additionally, the segment provides online and mobile banking, call center, and treasury management services. The insurance segment offers insurance agency services, including commercial and personal insurance products, through various carriers. This allows customers to access a wide range of insurance options tailored to their specific needs. The wealth management segment provides comprehensive wealth management and fiduciary services, including trust account administration, investment services, and retirement plan management. It also offers accounting and money management for trust accounts, as well as administrative and compliance services. Overall, Renasant Corporation's diverse service offerings make it a one-stop shop for customers seeking financial, insurance, and wealth management solutions. Renasant Corp's stock price has experienced a slight increase in the past year, with several key news events contributing to this positive movement. The company completed an all-stock merger with the First Bancshares on April 1, 2025, expanding its footprint in the Southeast region and increasing its scale in lending and deposits. This strategic move was viewed positively by investors seeking growth and market presence. The strong fourth-quarter earnings report, released on January 27, 2026, also played a significant role in the stock price increase. Renasant Corporation reported better-than-expected revenue and non-GAAP profit, with sales experiencing a year-on-year growth of 64.3%. This robust financial performance exceeded market expectations, leading to an immediate increase in the stock price. The positive analyst sentiment following the earnings beat further contributed to sustained upward pressure on the stock price. Analysts noted that Renasant significantly exceeded market expectations on both revenue and earnings, setting it apart from regional banking peers facing sector-wide pressures. Additionally, the declaration of a quarterly dividend on February 20, 2026, signaled financial stability and attracted income-focused investors, supporting the stock's valuation. Overall, these key news events have contributed to Renasant Corp's stock price increase in the past year, with the company's strategic expansion, strong earnings performance, positive analyst sentiment, and consistent dividend declarations all playing a role. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, lending activities, loan-related fees, and income from sale and servicing of mortgage loans are significant contributors to revenue expansion. Additionally, interest income on a fully taxable equivalent basis, non-interest income, and commercial and industrial loans also play crucial roles in driving revenue growth. Commercial real estate loans, residential real estate loans, and consumer loans are other key drivers of revenue growth. The wealth management segment has also been a notable contributor, generating $35.5 million in total revenue in 2025. Furthermore, increases in interest income on loans held for sale, non-interest income, net interest income after provision for credit losses, and sales of securities have all contributed to revenue growth. On the decline side, charge-offs, net of recoveries of amounts previously charged off, are a significant driver of revenue decline. Discontinuation of interest recognition on debt securities, transferred to non-accrual status, and losses on sales of securities also contribute to revenue decline. Funding of mortgage loans held for sale, decrease in loan volume, and increase in allowance for credit losses are other factors that have led to revenue decline. In summary, the primary drivers of revenue growth or decline are influenced by a range of factors, including lending activities, interest income, non-interest income, commercial real estate loans, residential real estate loans, consumer loans, and wealth management segment performance. The net income of the company decreased by $14,185 from $195,457 in 2024 to $181,272 in 2025. This represents an 18% decrease compared to the previous year. The decline in net income can be attributed to several factors, including a rise in provision for credit losses and impairment losses on securities, as well as increased operating expenses such as depreciation, amortization, and accretion. The profit margins of the company also experienced a change. While the net interest margin increased from 3.34% in 2024 to 3.79% in 2025, the non-interest income margin decreased from 26.7% in 2024 to 23.8% in 2025. This decrease in profit margins can be attributed to increased competition for deposits and higher funding costs, as well as regulatory changes and industry trends. The merger with the First on April 1, 2025, also likely contributed to the decline in net income and profit margins. However, it is worth noting that this merger may have long-term benefits for the company, such as increased efficiency and competitiveness. The company's financial performance is a notable aspect of its overall health. One key indicator of this is the generation of positive operating cash flow. The data shows a consistent trend in this regard. For the year 2025, the company generated $271,471, page 77, or $13,660, page 153, in positive operating cash flow. This indicates that the company's operations are producing sufficient funds to cover its expenses and generate surplus cash. In comparison, the previous years also show a similar trend. In 2024, the company generated $106,415, page 77, or $72,912, page 153, in positive operating cash flow. Similarly, in 2023, it was $148,553, page 77, or $52,149, page 153. The consistency of this trend across multiple years and sources confirms that the company is indeed generating positive operating cash flow. This is a significant indicator of its financial stability and ability to sustain its operations over time. The company's debt level and interest expenses have undergone significant changes in 2025 compared to 2024. The total debt level has increased substantially due to the acquisition of the First, with a notable rise in total liabilities from $15,356,550 in 2024 to $22,866,521 in 2025. Furthermore, total long-term debt has also seen an increase from $430,614 in 2024 to $499,756 in 2025. In terms of interest expenses, there have been notable fluctuations. On one hand, interest expense increased by 12% from $30,768 in 2024 to $34,729 in 2025. However, on the other hand, interest expenses for total short-term borrowings decreased from 1.32% in 2024 to 3.46% in 2025. Additionally, there was a significant rate shock of plus 200% and minus 200% mentioned on page 77. Overall, these changes indicate that the company's financial situation has undergone significant shifts in 2025 compared to 2024, with both debt levels and interest expenses experiencing notable increases or fluctuations. Management's vision for the company is to be the financial services advisor and provider of choice in each community they serve. To achieve this, management is focused on managing credit risk through various measures such as securing collateral and guarantees, actively monitoring borrowers, and using credit scoring models. In terms of overall strategy, management is committed to proactively monitoring and mitigating risks posed by the loan portfolio as a whole. This includes protecting the company's systems, networks, and data from unauthorized access through various measures such as documentation of policies and procedures, separation of duties, and employee training. Management is also aware of the potential impact of economic downturn on the company's business, which could lead to higher delinquencies, credit losses, and increased provision for credit losses. To mitigate this risk, management will maintain capital commensurate with its risk profiles and ensure adequate liquidity to meet customer loan requests, deposit maturities, and withdrawals. In terms of regulatory compliance, management is focused on complying with regulatory requirements, including becoming a financial holding company to expand permissible activities. Management also expects to take advantage of certain provisions of the One Big Beautiful Bill Act to manage credit risk. Overall, management's strategy is centered around managing risk, maintaining capital and liquidity, and complying with regulatory requirements. While there are potential risks associated with economic downturn, management is committed to proactively mitigating these risks and ensuring the company's continued success. The acquisitions and divestitures of Renasant Bank are a significant aspect of its financial operations. On the acquisition side, the bank has made several notable purchases. The First Bancshares, Inc. was acquired by Renasant Bank, expanding its presence in the market. Additionally, the bank invested in various securities such as mortgage-backed securities, collateralized mortgage obligations, municipal securities, and corporate debt. It also granted consumer loans to individuals for personal goods. Furthermore, the bank acquired Oreo, other real estate-owned, assets worth $11,032 in 2025. On the divestiture side, Renasant Bank sold substantially all of the assets of Renasant Insurance, Inc. on July 1, 2024. The bank also made dispositions worth -$16,190 in 2025 and -$3,123 in 2024. Moreover, it sold mortgage loans to secondary market investors, further reducing its portfolio. These transactions demonstrate the bank's efforts to manage its assets and liabilities effectively. The company has a history of paying dividends and buying back shares. In terms of dividend payments, the company paid out $78,604 in 2025, according to page 77 of the extracted summaries. Additionally, subsidiaries contributed $101,764 to dividend payments in 2025, with an extra $278 coming from other sources. The company also bought back shares in 2025, specifically repurchasing 388,940 shares in the fourth quarter as part of its publicly announced stock repurchase program. This is evident on page 34 and page 36 of the summaries. Furthermore, the company has a history of buying back shares, with specific amounts mentioned for 2024 on page 153. Overall, it appears that the company has been actively paying dividends and buying back shares in recent years, indicating a commitment to returning value to its shareholders. That concludes the financial summary for Renasant Corporation. Feel free to comment below, and I will be happy to answer them when possible.